Hello, YouTube family, Bulls and Bears. Welcome back to the channel. It is Wednesday, January 12th, 2022. We've got a lot of important economic news as usual. I scoured many different sources to find you what I think is the most relevant and the most important information that we need to talk about. We're going to talk about the economy, of course, the rising prices, the inflation data, earnings for different companies, closures, investing, and more. Let's go ahead and get started. Now, let's start right here with the markets. Dow Jones, NASDAQ, S&P, all in the green. Russell down slightly. But what we're seeing is some pretty big intraday sell-offs followed by massive buying. And even the headline right here, stocks rise as investors eye inflation data. Well, the inflation data is awful. Why are stocks rising based on the inflation data? The highest inflation in about 40 years. The Fed has a 2% inflation target. We're seeing automobiles rise close to 40% for used cars. The average price of a used car now is about $29,000. We're seeing rents go up an average of about 18% year over year, even worse in some cities. You would think that would be stock market negative. So no, the stock market's rising because of inflation data. That's the actual headline. But you don't have to look into the headlines very deep to see what's happening. You see big intraday sell-offs followed by massive buying. Take a look at what's just happened here in the past week. And let's just take a look at January 7th. And as you can see right here, my cursor, we were at about 36,357, dropped all the way down to 35,650. It's about a 700-point drop. And then we recovered. So any bad news that is affecting the markets, it's just gone within 24 hours in many cases. The dips just get bought massively, and we have to look to the Plunge protection team. Now it's interesting, when I started this channel just a few years ago, I talked about the Plunge protection team. A lot of people said, JJ, you're crazy. That's your tinfoil hat man, all this crazy stuff, right? All these crazy names I was called. People argued with me. They said the Fed can't do that. Now everybody knows it. Everybody knows about the Plunge protection team. Everybody knows about the Fed trading desk. Is the Fed trading desk in the main Fed building? I'm just checking my other monitor. I'm not going to look it up today. That's outside of what I wanted to talk about today. If any of you know, please let me know down below. I think it's at one of the big mega banks. The trading desk, the Plunge protection team. So yes, the markets completely get bought up on these dips, and I've been saying forever we're just going to see the markets go higher unless this stops. Maybe lightning will strike the trading desk. I don't know what's going to stop it, but it's not going to stop. You're going to see the markets go higher, prices, inflation is going to continue to go higher. The economy is going to continue to, on the surface, look like it's doing good. They're going to point to all these numbers. Hey, look at the unemployment number. 3.9%. Meanwhile, 100+ million people are out of the labor force. The labor force still hasn't recovered to pre-health crisis levels. A lot of people don't know that, but that's the truth. So I continue to buy on pullbacks. Right now, massive opportunity in some assets that have pulled back. In my opinion, that's what I'm going to be doing. I'm also still saving some cash on the side in case we do see that lightning strike event, that surprise event that rocks the markets, kind of like we saw in 2020, where major stock indexes got cut in half, only to march on to new highs, just like we predicted here. When it was down to 18,000 on the Dow Jones, we said it's going back to 30,000 and beyond, and that's exactly what happened. There were a lot of people out there, a lot of forecasters that said this is the end. And sure, they'll get on the video and they'll put on a shirt and tie, and a lot of them got it wrong. Here I am in my garage for years telling you exactly what's going to happen, and now I'm telling you that things are going to continue to trend in the same direction. Sure, you might see pullbacks, you might see sell-offs, but all marching on to new all-time highs, and that includes the housing market. All right, but let's get into some of these numbers today, recent numbers on the cost of living, rising prices data. Another record high spike in December. Inflation rate likely spiked to another record high in December, 7% from 1 year ago. 7%. 7% though, that's just the official number. The real number is closer to 15% and even higher if you look at some of the things we just talked about earlier. Rents, automobiles, the cost of energy, gas is up almost 50%, 80% in some places. And the Fed has a 2% inflation target, right? So Fed equals fail. Fed fail, Fed fail, Fed fail. And I think we should ask ourselves, what kind of world do we live in where we have people that fail nonstop, they give out wrong information nonstop, but yet they still get to control the markets. They still have the unlimited printing powers. It's amazing. And they can trade stocks with inside information based on what they know that their institution will be buying. So the traders, they don't get in trouble. They may have to resign or lose their jobs, but they get to keep all those profits. So what kind of world is this? Well, it's a mad one, and it's not likely to change anytime soon. That's the reality of it. We could sit here and get mad and stomp our feet, or we could figure out how to best prepare ourselves for what's coming. So continue to prepare for higher prices, high cost of living. Continue to look for investment opportunities. I don't give investment advice, but I've said here hundreds of times, what I invest in. Precious metals for the long run, for an insurance policy against that lightning strike event. In case of a catastrophic crash, as an insurance policy. Continue to hold cash for that big buying opportunity in case the lightning strike event happens. But in the meantime, buy the dips. Continue to buy assets that are continuing to go up. I'm not telling you should do that, but that's what I'm doing. And looking back now on the way I've been investing a few years, I'm actually sad that I paid off. I regret paying off some of the debt that I paid off. And I'm thankful and I'm happy that I'm out of debt. But if I would have kept the debt at a low interest rate, for example, let's say you have a mortgage, it's 4%. Instead of paying that off, if you can invest that money and make 10, 20, 50, 100%, which a lot of people are doing now in this digital asset environment, you could have made a lot more money versus what you had paid in interest to hold that debt. And for example, a lot of small businesses go out and get small business loans. So businesses, a lot of times they'll take on debt in order to make more money in the long run. Hopefully the small business succeeds. But sometimes debt can lead to profits and gains in the end. So debt isn't always bad. You see, I like to share what I've done, even how I've failed and how I could have done better to try to help you guys. All right, but speaking of small business, let's talk about a recent article here. And this was a recent interview with the CEO from Planet Fitness. Now, Planet Fitness did not close any gyms during all the carnage in 2020 and 2021. And that's what we see a lot of times. The big mega companies do just fine. They can pay the higher wages. And considering a lot of these companies are multi-billion-dollar companies, they can do all of the upgrades and make all the adjustments that are needed for the response to the health crisis. A lot of small businesses can't handle that. So let's just take a look at some of Planet Fitness's profits. I think it's a good gym. They've got good prices, and they don't lock you into a contract as far as I know. I actually have a 24-hour fitness membership, and I've got a lifetime membership with them. So I've already paid this huge fee several years ago for a lifetime membership. Hey, speaking of fitness, I've never done this. Are you guys ready? Here goes. I'm going to flex. Yeah, that's a real pale arm, and it needs some sun. Yes, I'm in California, but I don't always get out in the sun, especially in January. Now, I know a lot of my viewers are going to complain. You're going to say, JJ, I didn't come here to watch you flex. Lighten up, people. Have some fun. Have some fun. Don't be so uptight. And if you're going to unsubscribe over something as silly as that, you wouldn't want to be all right. Let's talk about Planet Fitness, though, a little bit more. Let's look at their profits. Let's see here. These are the third quarter numbers. Planet Fitness surpassed third quarter estimates by 13%, reaching $154 million in revenue compared to $105 million the year prior. And that resulted in a net income of 18.6 million, up from 3.3 million, which was a loss during the same period a year prior. So 2021 was a big turnaround year for Planet Fitness. They closed 0 locations. Now, can that be said for a lot of smaller businesses? No, a lot more small businesses failed than big mega companies failed. So that's part of this whole wealth transfer, this shift from the poor and the middle class, the working class, up to the mega companies, up to the top 10%, etc. And we know during the past few years that continued to worsen, and the gap got wider than ever at any time in history. Now, here's some stats about small businesses. Nearly half of all Americans, about 47.5%, are employed by small businesses. Now, remember that number, 47.5. And if we just check some history here, it was 52% back in the early 2000s. So we've dropped from 52% now to down below 48% in the 47% range. So more proof of what's happening. We're seeing more consolidation of businesses up to the mega companies, and more smaller businesses, especially over the last couple of years, more smaller businesses having to close their doors. Smaller businesses, they can't as easily go out and pay higher wages. I know everyone says if they can't pay higher wages, they shouldn't be around. Well, fine. So you're going to lose about 47% of all these jobs that are out there if you just let all these small businesses close. And then you go to work for a mega company. Do you think the mega company is going to give you enough raises to keep up with the rising cost of living? Especially as they get more power and more market dominance, as small businesses continue to get eliminated? No, they're going to continue to pay as little as possible. You'll continue to see strikes. Let's talk about a recent strike here. I think it was Kroger. Let me look this up for you. Out of the Wall Street Journal, about 8,400 unionized workers at Kroger's in Denver walk off the job, demanding better pay and benefits. All right, so we see mega companies in many cases not paying nearly enough to keep up with the rising cost of living. So the solution, some people would say the solution is to let all small businesses fail that can't afford to pay higher wages. Well, guess what? When all the small businesses are gone, the big companies, the multinational nationwide companies both, they're not going to pay wages high enough to keep up with the rising cost of living either. And when they get more power and less competition, it's going to get even worse. You think a lot of people are striking now, wait to see what's going to happen a few years down the road. So pretty scary times, folks. I don't want to raise any alarms. I don't want to get anyone in a panic, but continue to prepare. This is the direction we're headed. Prices continue to rise. Look for investment opportunities, and try not to let it stress you out. A lot of this, we can't control, but we can keep our eye on the news, on the pulse of what's happening in the economy, the financial system, and better prepare ourselves. Try not to be stressed out. Try to have some fun, baby. Love y'all. Please subscribe if you haven't subscribed. Big love. Peace. Stay well. Stay prepared. Keep stacking. Bye.